From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 9th, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. As we can see here from the daily time frame, we have primarily been in a downtrend for this currency pair. If we look from the top of the chart all the way back in August of last year, we started this downtrend, primarily been in a downtrend. Now we are towards the bottom of that trend. And even if we take a little bit of a shorter trend line, we can put it like this, and we can see we're towards the bottom of the trend, but I believe there's still room to go, still some room to go lower if this currency pair can break the current support that we're seeing right now for the New Zealand dollar, coming all the way down into 68.80. 68.55 is our current area of significant support. That's the green shaded area down here towards the bottom of the chart. I put two boxes here, the black box and the blue box, to show us where we are currently finding support. We've been here before. We saw back here in December, the market came down, found support right around the 68.55 level, bounced up and challenged the higher trend line. Then we've been coming down ever since then, and yet now here we are again a couple of times now, already challenging that green shaded area as support in the 68.55 level. We've come up for the past couple of days. Let me go ahead and zoom it in one time. We've come up for the past several days back into the yellow shaded area as resistance, but we see a little bit of a falling high to this resistance. If I take another trend line and put it on the last two highs here, we can see a little bit of a falling high. So that falling high may give us a clue that we're looking at the sellers being more dominant than the buyers, and the fact is we might look for it to challenge the green zone, and a break would see a continuation of the downtrend. But a period of ranging, congestion, consolidation, whatever you want to call it here in the blue zone, is what we're looking at. Let's zoom it in one more time, and you can see, actually, let's see if we can go in two times. So what we're looking at is the yellow shaded area as resistance, and that's not too hard to see. The last 3 days, today included, have found resistance over here 3 days, over here 1 day, finding resistance at the yellow zone. If anything, what this should tell us is that it's not a very good place to buy or go long for the currency pair. We've seen several instances of downtrends. We see a lower high here along this little short red trend line. So all of that tells me that going short seems to be the direction that we want to focus on. We don't want to go long into the yellow zone, so maybe that becomes the area that we're comfortable with going short here for the New Zealand dollar. The risk in this scenario is that it breaks above here and starts working its way higher back towards the pink shaded area up here into the 69.60 80 level. So what we're looking for, as long as it sits underneath 69.10, 69.25, the possibility of going short in the direction of the trend, targeting back down to the support, which is the green zone. And of course, at any point it breaks through the green zone, we look for the continuation of the overall trend. Let's do one last thing. Let's take Fibonacci from our last highs up here at this blue shaded area. Let's take it from the last highs down to the current low, and we also find the 382 Fibonacci retracement level sitting right here in the yellow zone. So couple of things about that 382. It's a retracement point, but acting as a barrier now as resistance. 1 to 3 days now, unable to get back above that 382 at 69.20. We did challenge it, we tested it, but was unable to stay above that 382. So what I'm looking for is for the market to hold this yellow zone today as resistance, as it already has, fall back down to the green zone, and maybe even eventually break down through that green zone and look for further profit. So if we're going to go short, we want to go short as deep as possible in there. I have my pending sell order set at 69.15, just into the bottom of the yellow zone. If you wanted to put it at 69.20, that would even get deeper inside of there. And of course, our risk, and I'll just take this red line and put it up here like this, our risk or our stop loss should be above the last little high there that we see. So we want to place our stop loss just above this last little high, somewhere into the 69 45 to 50 range would be a pretty decent area to put your stop loss. That way, in case it breaks above that yellow zone, we have limited risk on the trade, and we would look for us to get out if it breaks above 69.25. So selling the yellow shaded area, targeting the green zone or lower, risk above it is what I'll be looking for today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.